Hello and welcome. When we just look at the markets, U.S. markets have actually recovered. That's the U.S. futures, and Dow futures are now up about 200 points. You can see the flashes at the bottom of your screen. Markets are in green, and there is a hint of recovery as far as markets go. S&P futures have recovered about 1% from day's low. Nasdaq futures is up about 1.2%, and as we told, that Dow Jones futures is also looking higher. India is no different, 17,133. Slightly higher than that as we speak, about 125 points higher from the day's low. At a point of time, we were below 17,000 for just a marginal bit, but now we're recovering. And with that, even the breadth is recovering, and it's the cement sector that's actually taking a slightly higher move. So it's looking in strong as we start this particular show. Let's welcome in our first guest on the show. Abhijit is now with us. Abhijit, in terms of Nifty outperformance and the sort of sell-off or any reaction that you see to the markets now, looking at the global markets, it's getting recovered faster. What does it essentially try to tell us as an investor?
Pankaj, thanks for having me on your show. And see, first of all, I don't think there's anything to be read into the day-to-day moves of the market, right? We will keep going up and down. Last week, everybody was talking that India has got decoupled from, the global situation. Ultimately, that is not how it works out. We are coupled to an extent, but also the fact that India is a separate entity. We have our own sets of challenges and our own sets of, good things. So, in a way, we will, in my opinion, next couple of months, we will see these kinds of volatility. My personal take is maybe in today's kind of fall, we will probably be closer to the short-term lows, maybe another 4-5% down from here at most. At least that's what I think right now, and probably then we will see a change in narrative, something that may come from abroad or from some liquidity flows from here. So nothing much to be read into these short-term day-to-day moves.
Right. Can you just talk to us about what's really happening as far as sectors are concerned? So as you said that Indian markets are showing signs that they are relatively better placed when the world is falling in. But what is the sense that you get when you talk about certain sectors? I mean, for example, cement. We've seen a large M&A coming in. Auto companies are continuously launching despite any sort of problems that you are hearing in the world. What is the sense that you get? How should one approach this market, which essentially is not giving a chance for investors to come in?
See, you have to look at the market, divided into two parts. One is how the economy or the industries are doing, and that's the first part. And the second part is how, what kind of liquidity flows are there, whether it is global, domestic, so forth. Both are important for the markets to go up or down. Now, if I look at, whenever we are discussing or when we are talking to managements of companies, what we find is that there is a significant sense of bullishness, especially in sectors where there is a lot of, infrastructure, capex, or capital goods, those kinds of sectors. There's a lot of, bullishness coming in from the management. So, if I look at railways, there's a lot of work which is happening there. Obviously, any kind of infrastructure and capex that is going in from the government side is going to result in some kind of a boost in all the industries, whether it's capital goods, engineering, railways, cement. So all of these, ultimately you will see that they are going to look much better. The additional benefit for, let's talk about engineering, is that a lot of MNC engineering companies in India are looking to source much more from India vis-a-vis, let's say, a year or 2 years back, whether it's their China Plus One policy or something else which is driving this, sort of democratization of their supply chain. But India is getting into a lot better position in some of these, old world industries, if I may call them that.
Abhijit, let's take it one by one. Abhijit, let's take it one by one. Cement, of course, has seen a M&A. You've seen commodity prices coming down, and maybe that's why they have rallied. But first time in the last 12 years, you're getting a sense, as you pointed out, any of the infrastructure companies are talking pretty positive. They're getting orders, they're getting it executed. Banks are willing to, give them and fund them a lot of loans versus what was not the case earlier. So can you just tell us that is probably the sector to be in, and if it actually continues, still returns could be made despite despite decent moves already given by capital goods companies?
Yeah, absolutely. I mean, right now, the next, say, 2-3 years, I think is going to be very good for capital goods and engineering. Also for any place related to the railways, where we are seeing a very large amount of, investment happening. So, yeah. Sorry, were you saying something?
Go ahead, Abhishek. Yeah, I can hear you, Abhishek. Go ahead.
No. So, autos, real estate, I think both of these, real estate again, look at the numbers, registration in Mumbai in August, I think they've been decadal highs. So, a lot of these plays are actually coming out. India, if you look at it per se, is, purely from a business perspective, is looking, it's looking definitely good. Just look at, I was reading the last 2 days news, Samsung doing 1,000 crores of sales on the first day of these festive seasons. Just talks about the kind of demand that is, latent demand that is there. There will be ups and downs overall, but I think across the board, I think India looks fairly decent. Some of the stocks that, the run-up that has happened because they have not done anything pretty much for the last 4-5 years, some of these cyclical sectors. So now you are seeing a first move, and as and when the numbers keep coming, the stocks should, continue to do well.
So, let's talk about pharma. We are at two ends when we talk about cap goods, when we talk about re-rating in infrastructure, re-rating in a lot of sectors. Same way, there is a big de-rating in the pharma pack, extra Sun Pharma, extra Cipla. It's looking in pretty weak. Would you try to spend some part of your allocation towards pharma, maybe IT, which is cracked, because that gives you some sense of defensiveness in a market fall?
So pharma, I am personally, there are two parts to pharma. Like there are 2-3 companies that I am personally reasonably bullish on right now. I think 2 you've already named. Sun is doing well. Cipla is looking good. And the third company that I follow, which is doing well, is JB Chemicals. These 3 are doing reasonably well. And also to play the pharma indirectly is through the API companies, whether it is something like a Divi's Labs, again, very, very well managed company. So these are companies where, I think there's significant amount of opportunity. And if you have a slightly longer term horizon, these are good, names to look at and pick up, over the next 2-3 months, because my sense is that pharma actually could be, a good bet for the next 2 to 3 years, because of the fact that fundamentally, and especially if you look at the domestic focused pharma companies more, I would think that they will do reasonably well. But in pharma, the only challenge is you have to be very, very stock specific, business specific.
Right, exactly. I was coming up to this question that, pharma is not like a US generics play, which was the case earlier. Would you look at India? Would you look at US dominated? Would you look at something like a diagnostic? There are 5 other listed hospital players. How would you essentially look at this sector?
So I would look at, India, India specific plays in the pharma sector and the APIs. That's the sweet spot, I think, right now in the pharma area. Hospitals, again, very, large capex required. I'm not very sure how it will play out. And I'm not very positive on the diagnostics at all. I think it's a very difficult business to scale, very localized, not an easy business to be in.
All right, sir. Thank you so much for taking out time for us. Always good to get perspective from you. On that note, we're taking a break, but